Hey everyone, it is July 7th, 2024, and I'm going to be doing my weekly week in review video. I got a new mic, so if it sounds better, then I'm glad, but we can just get straight into it. Let me pull up my trader sync real quick, and we can just start with the trades that I executed this week. I want to review them just for my own documentation purposes, but also just to see like what I did well, what I did bad, how's my entry, how's my exit, and all the questions that come with each trade. So this is all going to be based off when I exited the trade. So if I exited the trade starting last Monday, July 1st, I'm going to be covering it. So we can just get started. The first trade is JPM. All right, so I'll pull JPM up. JPM, as you can see, I entered on June 28th, so the candle right here, and I exited July 1st, so this candle right here, the next day. Well, this was Friday, and then July 1st was Monday. So D1, why did I like this stock? As you can see from the May 20th candle, the high of the May 20th candle downward, there's a high minus trend line that was breached on June 27th. There was then follow through buying on June 28th, the day I entered. As you can see, there was a buy signal set up also on the D1 basis. And just the breakout was decent volume, and the follow through was just even stronger volume. So I thought it was a good place to enter into the JPM trade, just because this breakthrough wasn't a fake breakout, because it showed some strength. So I thought it was a pretty high probability trade to enter in. So I will show you the chart on June 28th. So the M5 basis. All right, this is a chart of JPM on June 28th. I entered at 11:21 a.m. So this candle right here at 201.94. So about right here. This is one of those instances where, again, I didn't enter well. Just something I need to work on more is entering better with either LRSI crosses or HA reversals on the M5 basis, or even for more of a swing trade basis, I can enter in a longer time frame like the M15. Just so I'm not like immediately at a loss. I'm kind of, instead of managing a loss, I'm managing kind of profit like immediately. So entering well is definitely important. I need to work on that. But as you can see, JPM gapped up, kind of tested the high of June 27th. Then it rallied up, went through VWAP, and stalled at around the 202.30 level. Had some selling. Ended up testing VWAP, bounced off, and kind of just grinded up slowly for the rest of the day. But mainly the big move was from like 9:45 to 10:50. So I got in a little late for the day if it was a day trade basis, but I wasn't day trading this, I was swing trading it. And so I held it until the next day. So we can see what SPY was doing on the 28th. Okay, here's the 28th, I'm pretty sure. Yeah. So SPY gapped up, had some initial strength, then had some selling pressure through VWAP and continued selling throughout the day. So as you can see, JPM, SPY, inversely proportional to each other as JPM has been grinding all day on the 28th. SPY has been dropping. So I like the strength that JPM was showing, especially with the breakout on the D1 basis. So I liked holding it. I was comfortable holding it over the weekend. Now I can show the exit. I exited on July 1st. July 1st at 9:50. So this candle right here at 206.32. So the low of this candle here. So before I go over why I exited, we can see what SPY was doing that day early on. Early on, SPY basically just pretty hard selling. I mean, I see this as more residual selling from the previous day. Kind of testing, getting close to the low of the 330 candle, and actually breaking through it, but kind of getting close there. This is around like the 542 level, 542.60, 542.50 level. So it got close to there. But basically, JPM opened up and had some initial strength. The reason why I exited at 950 was so the high of this is 207.09. The high of this candle, the May 20th candle, is 205.88. So it got pretty close to it got through the high of this candle, but then it started showing some weakness, and I didn't like that. I didn't like how it couldn't really get through it with strength at this resistance level. So I decided to take profit on it. It was I think a pretty good technical reason to exit the trade. So I took profit and ended up making $4.38 for the one share I traded, which is decent for the trade. Overall, this trade I think was good, besides maybe the entering aspect of it, which I'm writing down on my notes now. So enter better on a higher time frames, enter better and entering on higher time frames, and N5 and N15. So that was the only thing I could see with this trade that I could improve on. Next trade, Disney. Okay, so we have Disney here. I went short Disney on July 1st at 11:23. So July 1st, this red key bar through the 200 SMA at 11:23 a.m. at 98.16. So I'll first go over the D1 basis again on Disney and why I liked it. I try to trade stocks, especially for swing trading. I mean, definitely for swing trading, with a good D1 chart. Do I like the D1 chart? If I'm going to be holding it overnight, I need to like the D1 chart. I mean, that's like the kind of the need be. But for day trades, it's definitely a plus if the D1 chart is great, because then I can potentially hold it overnight if it wasn't doing exactly what I thought it would be doing during the day. But it's not like a needed thing for a day trade, since I'm only going to be holding it for the day. But I was swing trading this stock. So I saw this selling on June 28th. It was able to break through the 200 SMA, but it didn't close below it. It kind of retraced back up above it. But then on July 1st, there was follow-through selling, heavy volume, as you can see. Both these days were heavy volume. Follow-through selling through the 200 SMA, and resulted in a red key bar, actually. So I entered. So I like this. I like that breach, and I like this selling strength through the 200 SMA. And I thought this selling strength would potentially continue into the following days. So I'll show you on July 1st. So this is June 24th. Okay, so July 1st, we see the follow through selling, and I ended up shorting the stock at 11:23 a.m. So this candle right here at 98.16. So exactly here. I just saw this selling strength early on, and I was expecting it to continue throughout the day. And we can see what SPY was doing on the first. All right, here we go. So SPY gapped up, heavy selling as Disney did, and then it rallied above VWAP and kind of chopped around for the rest of the day. Disney gapped down. I went short at 11:23, but Disney never showed any strength above VWAP. It kind of just had a slow grind down, but basically didn't move really anywhere when I entered. So what I'm seeing about this stock, and my mistake possibly, was a bad entry. Definitely could have entered better, but again, that's something I need to work on. I don't believe I entered on a LRSI alert or HA reversal, so I need to be more consistent with that, more disciplined. But I held the stock because I saw the weakness below the 200 SMA, and I sold it on July 2nd at 10:08 a.m. So we can get what Disney's doing on there and what SPY is doing. So I sold it at 10:08. So this bar right here for at 97.81 and made 35-cent profit. So this was, in my opinion, a horrible exit. I think I just got shooken out just because SPY was showing early strength. Disney was kind of undecided, kind of opened flat, had a heavy selling first bar, then very undecided with Doge Eyes. Kind of recaptured the first bar, still undecided, and then it started showing. So really, I should have let Disney decide what they wanted to do, but with SPY in the background having strength like this, I mean, SPY was undecided early on as well. But yeah, I mean, looking back on this, I mean, SPY doesn't look like it was decided until, I mean, it has at least breached this high, or probably even this high. So it probably wasn't even decided until like 11, maybe. Slow uptrend, back at VWAP, slow grind higher. So this day was just super, I mean, light volume, a slight grind higher. So Disney was, I should have really let Disney, gave it a little bit of time to decide which way it wanted to go. So I kind of got shooken out of the trade a little bit. I really should have stuck with my game plan with one ATR, which would have been $1.58. So, I mean, if I 98.16 to 96, it would have been pretty close getting there. I mean, about like $1.20. So, I mean, I definitely could have held it longer, I think. I mean, looking back, definitely, but just look at these candles. Disney wasn't really decided where it was going. It was kind of sellers and buyers were fighting, along with SPY, sellers and buyers were fighting. So definitely exit a little fast on this trade. But so I ended up making 35-cent profit on this trade. Not the best trade, but we can just move on. Actually, write in my notes, have a definite technical reason to exit a trade on a D1 or M5 basis. Because I guess I didn't really have a technical reason. I kind of got scared out of it. So, yeah. And I'm going to say, like, be more patient with game plan. Okay. We can continue now. Next stock is BIDU. I shorted the stock first on June 28th. So right here. Let's first go over the D1. Why do I like the D1? So June 28th, right here. As you can see, I mean, I've gone over this stock a couple times. the super strong selling since May 17th. Just continue selling strength. I mean, there's really no stopping like for rest. It was just continued selling. So I didn't think this was going to stop anytime soon. I thought there was really no signs of compression. So I shorted it on June 28th, and I shorted it on June 28th, and then I ended up adding on July 1st and exiting on July 2nd. So we can go over each one of those M5 bases. SPY on, we went over already, but we can go back on June 28th. And BIDU was doing this on June 28th. I shorted at 10:42 a.m. So 10:42 a.m. SPY was gapped up, some early strength, followed by kind of compressing here and falling below VWAP. At 10:42, kind of seemed to start compressing here, and I was trading BIDU as a swing trade. So again, my entry here wasn't the best. I mean, I guess it was a good entry just based off luck, but I wasn't entering on technical reasons as I should have been. I really should have waited for a possible HA reversal, which probably would have got me in right here instead of over here. I guess here. So it was a little early, but throughout the day, slow grind lower. The next day when I added, opened flat basically, so early strength, and then selling for the rest of the day. When SPY was doing kind of nothing. I mean, it was doing a lot, but it was going really nowhere. So I like the selling strength still. So I added on July 1st at 10:49. So like basically like this bar right here, heavy volume, heavy selling. So that's the main reason why I entered. Actually a sell signal set up on the M5 basis. And so I added at 86.67. So my average entry price was 86.97. And then I exited on July 2nd at 10:14. So right here, 10:14 at 85.59. So I made $2.77 for the two shares, or $1.39 for each share. So this trade, what did I do good? What did I do bad? I think overall, D1 basis, I chose a good stock. I chose a weak stock. SPY during this time was on a D1 basis, so July 1st wasn't really doing anything. So you really could trade both sides. So I liked the stock. I liked how the weakness, and I liked how SPY, when I was at the time, I was preparing for a potential dip, so I thought having a short on would have been a decent play, especially such a weak short or a weak stock. So I think it was a good stock pick on the D1 basis. I thought it was good that I practicing adding to winners, just because it was showing my thesis was correct with it, and I wanted to add to that instead of take profits too early. So I added. What I didn't do the greatest on was, I feel like entering on like a shorter time frame, like M5, and I also don't feel like I did the greatest on I guess just like I mean, I guess just like entering would probably be my, probably entering would be the one that I would say the most. I mean, SPY also had a, on the July 2nd, SPY, when I exited, ended up having an kind of a bullish trend day. So that's also a main reason why I exited as well. So I think my exit was decently technically sound. But yeah, so I think overall it was a decent pick. Could have executed a little better, but I think I'm definitely improving. So yeah, next pick is Meta. Get Meta up. Okay. So Meta, this stock was a ride for me. So I initially went long on June 27th. So here, this is very similar to what stock was it? JPM, with this high minus trend line getting breached with strength on this case the 26th, with follow through strength on the 27th. Both these with relatively, I mean, not the best volume, but like it still had like buying. I guess I could have leaned more on the volume, but it still had a breach of the trend line. And in this case, it was a false breakout because on the 28th, it was followed by a red key bar below the trend line and below this horizontal support was support, now resistance at like 514. So I mean, we can just see when I entered, see what SPY is doing on the 27th. Okay, here. This is the day I entered. I entered at 10:19 a.m. So this bar right here. Looking back, there was really no reason for me to enter it here. What was SPY doing on the 27th? SPY was doing really nothing. Couldn't really get above VWAP. Couldn't get it really above. It can get like marginally above it, but like around the 547 level. Couldn't get really there. Kind of chopped around all day. So yeah, there's really no reason for me to go long Meta here besides the D1 chart, which I shouldn't. I think I need to put more emphasis on the shorter time frames, even for swing trades, because my swing trades aren't like weeks; they're like days at most. So I think it's also really important to put a lot of emphasis. I think I need to start putting more emphasis on the M5 and the M15 basis, entering well, and mainly entering well, but also exiting well, and just putting more emphasis on the technicals for these time frames. Because there's really no reason for me to enter at 10:19 here. I mean, that was the high of the day, so I was immediately in a loss, So did that. It was followed by the next day, gap down, followed by red heavy volume bar. Some buyers here, support formed here. Buyers rallied it back up to around the 521-ish level. But then it was met by selling through VWAP and then kind of chopped around with a downtrend the rest of the day. This was the 28th. This resulted in the red key bar on the D1 basis, SPY, on the other hand, or SPY was actually doing, SPY and Meta were doing very similar things that day. So Meta does not have relative strength. It is following what SPY is doing basically to a T, not showing strength by itself. So that's also another, if I waited on an M5 basis to better enter, or even an M15 basis, or even just been more picky with my picks, I wouldn't have entered into Meta. Not at least now. I would have probably entered probably later, but at this moment I wouldn't have entered. Just because there's no reason to. It's not showing strength on the M5 basis. It's showing basically nothing. I mean, possibly even weakness compared to the market. Or I would say about the same as the market. So it's just kind of doing nothing compared to the markets, just following it. So on July 2nd, so July 1st, we see it gap down. It opened flat then some follow through selling, met with some support at the 493 level, and then a constant grind higher the rest of the day. So still at this point, I wasn't that confident with Meta. I mean, I was still confident enough, and I'll show you on the D1 basis, but I was confident enough to stay into the trade. But I knew I had to kind of change my game plan up in order to come out of this trade profitable. So on July 2nd, or this is July 1st, so on July 2nd, it gapped down and a slow grind higher up. So on a D1 basis, this was my game plan. So this breakout failed. I should have saw this before I entered. I should have done better analysis, but I noticed that this compression zone from like the 514 to like the 493 level was pretty strong. I mean, there was multiple touches on both. And after July 1st, which resulted in a bearish hammer off the low of this compression level, I thought that there was a high probability that it would test the high of the compression level again, especially with the market at the time. This is July 1st. The market kind of doing nothing. July 1st. So the market's not really doing anything. So, and Meta is able to kind of, I guess the market and Meta are doing basically the same stuff, but I don't know. I just thought that it hit the bottom of this compression zone and it was likely to at least challenge the top of this compression zone. So I ended up averaging down my position on July 2nd at 9:50, about 10 a.m. I got two more shares, and my average cost my average entry price came down to 509.14. And the rest of the day, it continued up. The next day, gap down, and had some follow through. Kind of just chopped around a little bit for this day. So I ended up exiting at 9:39. So this candle right here at 509.91. So I made like 77 cents per share. Actually, reviewing this trade, I do not think it was a good trade. This is actually a pretty poor trade on my part. Poor entry. Kind of looking back, it probably was pretty stupid to kind of average down on this trade. But Because looking back, SPY and Meta are doing very similar actions. So the kind of Meta's kind of following what SPY's doing to the T. And so in a way, I'm not following the system when I'm trading this. So yeah, I think in general, Meta wasn't the greatest trade. I wouldn't even think it's a good trade. So I would say for this trade, I got lucky. And I did stupid stuff like averaging down. So I'm going to write that in my notes. Meta trade stupid. So that was definitely a mess up on my part. Okay, next one, Tesla. So Tesla was a day trade on July 3rd. So this candle right here. I entered at 10:38 a.m. and I exited at 10:42 a.m. So I would say this is more of a scalp, which I probably shouldn't have done. Looking back at it, I probably shouldn't have traded Tesla in general. I think a lot of people in the chat room just trading Tesla, and I probably got FOMO just because Tesla was so strong, and I got in at 10:38, so pretty close to the top of the day. A lot of the move was already exhausted. Then I got out the next candle at 10:42. So this was, again, not a good trade. It wasn't technical. It was gambling at best. So not good. Luck again. So don't scalp. I really shouldn't be scalping. I mean, I don't know why I am, or try to at least on this one, because I'm not at the skill level yet where I can scalp effectively, and so this was a poor trade. I mean, SPY on the 3rd, SPY's been just rallying. I mean, not rallying, I guess, but it's been super strong since July 2nd, making new all-time high since the 3rd, made a new all-time high on the 5th. So it's been strong, but this Tesla trade was not good. I mean, I ended up making $1.41 for the share, but just because you make money doesn't mean you did a good trade. Next trade, NVIDIA. This trade was also a poor trade on my part. This was also scalping. I feel like I need to be more. I mentioned this already. Be more. Be more conservative with day trades. For some reason, the day I get my day trades reloaded, I try to just use them that day because I have them. I really should be looking for the highest probability setups for a day trade, technical, and not that I'm scalping. Something that I could be holding for a majority of the day, making decent return on it. So no scalps. I'll show for NVIDIA. Not the greatest, 10:56. So July 3rd. I got in at 10:56. So this candle right here. Added at 11:03. So this candle right here, and then exited at 11:07. Yeah, so this trade was just scalping, pure gambling. I mean, NVIDIA was a good trade for a day trade. I mean, I would not trade it on a swing basis. I mean, I tried that already, and it's not a good stock right now to trade on a swing term basis. It's been stuck in this kind of range, like on AVWAP E to like 128.15, but on a On a day trading basis, this was a good trade. Compressed. Let's see what the market's doing on July 3rd. It was a shortened trading period, but still. July 3rd, slow grind higher all day. Opened, long green bar, kind of dojis forming, unsure what we're going to do. Staying above VWAP, but barely. Long doji. Pretty sure this was some economic report. I forget which one, but it's just something like maybe we can see market view. I guess we can. I'm sure there's a way to see an option stalker, but it was some economic report that came out at 10. There's a long doji, heavy volume doji. Then the market kind of still compressed. It was just a slow grind higher. It wasn't anything crazy. But finding a stock with relative strength as the market slowly grinded higher was a good way to make some money on a day trading basis. So as you can see, NVIDIA, super high volume, so a good candidate, kind of chopped around, was unsure what it was going to do. Battling, sellers and buyers were battling out. Not as high volume either, pretty low volume. But then at 10:40, it started to pick up some steam, 2 green key bars, and all day kind of continued its strength. So I didn't have the worst entry. There wasn't any LRSI crosses. There wasn't any. I don't believe these would be considered HA reversals, but they possibly could be. I'm not sure if it has to be after a red candle, or if it can be after any candle that has a tail. But I don't think there's any like alerts for entering on NVIDIA, so I probably could have entered definitely just one share at this time, and then held it and seen how it was doing and not exit. 10:40. The market really showed no reason. If maybe exiting, if it crossed below VWAP, I would have exited, and if NVIDIA showed some weakness as well. But there's no reason to exit NVIDIA so fast. But in general, I think NVIDIA was a good day trading stock. Just a poor execution on my part. I should have not scalped it at all. Next stock is BIDU again. So as we went over already, I ended up trading BIDU again. So as we mentioned, BIDU super weak. On July 2nd, it showed some strength. It showed continued strength. Chinese stocks were super strong on the 3rd. Continued strength this day. I guess it was a very poor trade as well. I shorted the stock again on July 2nd, and then added to the short on July 3rd. Ended up with 6 shares, and then exited on July 5th and made 23 cents a share. So this was not a great trade. I don't believe BIDU is going to be showing just a crazy strength all of a sudden. So I don't think it would be horrible to be holding BIDU as a short longer term. The market is not necessarily going in your favor. It's been pretty strong the past couple of days, and BIDU is, has some strength. But I don't think the selling is just going to go away. Once the market has some dips, I think BIDU is going to follow. and be even weaker than the market. But I shouldn't have, first of all, traded a short on July 2nd. That was not a very smart play. I went long at 12.11. So what was the market doing at 12.11? So the market seemed like it was just cracked below VWAP. So that's probably why, but I guess I need to wait for confirmation below technical levels, or wait for confirmation through technical levels. So that's something that I definitely need to do, because I'm guessing I saw this and I saw it as like a weakness point, breaking through VWAP, and I shorted the stock. But then it continued. It basically bounced off VWAP and continued higher for the rest of the day. And VWAP on the 2nd continued its strength. Then gapped up on the 3rd, and I don't know why, it was a very stupid move, but I averaged down this position as well. Or I guess in this case, averaged up this position. And my average entry price became 88.30 or 88.31 instead of like 86, like 50, around there. So so I averaged up, and then on July 5th I exited at 9:55 a.m. at 88.07. So I made $1.41 for the trade, or like 23 cents per share. So again, this was not a great trade. I'm actually going to mark the trades that are horrible. So JPM was decent. Disney was decent. The first BIDU was decent. Meta was not good. Mistakes should bad trade. Okay. Tesla scalp. I really need to be more, just more like intentional with this journaling. I mean, I journal in I have like my own Discord that I post my trades in. I journal in there a little bit, but I need to be more, every trade I take, be more like write everything out about it. I feel like I just kind of get into like a mindset sometimes when I'm trading where I'm like, I don't really see the downside of a possible trade. I only see the upside, and I need to kind of see it more objectively. I've been reading the book Thinking in Bets by Annie Duke, and in that book, she says to have everything you do think about it, and if you were betting on it, and that will prompt you to look more into it. So I can't treat trading like I'm going to win every trade. I need to treat it like it's a bet. Like I could lose it. I could lose money on the trade. So I need to make sure I have all the information laid out in front of me in an objective manner that I can identify the best possible decision. And that could be not even taking the trade. That could be waiting to take the trade. That could be taking the trade at the moment. I have to have all the information laid out. And yeah, I'm going to miss some trades because it's going to take me some early on now. It's going to take me a lot of time to learn how to do that, or like it's going to take me time to like write it all out and get all the information like laid out. But Sorry, I'm just writing that down actually. It's going to take me some time to lay out all the information, collect it all, and like be able to kind of conceptualize it early on. But the more I do it, the better I'm going to get at it, and the faster it will be. It'll be kind of second nature, hopefully, in the future. So next stock, or I guess I can continue with my marking of horrible trades. NVIDIA. Scalp, bad setup, scalp. BIDU. I feel like this is like going against market. Bad trade. Okay, we'll continue. SG, Sweet Greens. So, Sweet Greens. I liked this downtrend and this breach of the 50 SMA. And I like the breach on July 2nd. It came with decent volume. It's all right volume, and so this stock, I shorted on July 2nd at 12.22. So July 2nd at 12.22. So here, this candle, it's a horrible entry. So I need to work on that, as we all know. So not a great entry. And then I added to the short at 3.52. So right before the close, this candle. So basically averaging up at 27.97. So again, the thing is, averaging up is not a bad game plan if that's in your game plan, but it wasn't in my game plan. I did it because the stock didn't do what I thought it would be doing, and I wanted my average price to be like higher in this case. I ended up adding to the stock at 28.49 on July 3rd at 11.32. So like here, for an average entry price, I got two more shares, so I got an average entry price of $28.11. So again, not a great thing to do. I mean, this is not a great trade. I think it's a good setup, but I shouldn't have been averaging up because I'm not at the stage where I could be averaging up. I would say that's in a way of like kind of like it's not being rational and kind of being emotional more and thinking my trade is going to work out at some point, so I might as well get the most money by averaging up so it goes down more. Yeah, so in general, that's horrible decision. Ended up on July 5th, I ended up exiting at 10.43. So this candle right here ended up making like a measly 10 cents per share, which is horrible. I mean, the ATR is $1.87, so that's basically break even. That's not even classified a win in my mind. It's break even. So I don't know. This trade, again, I'll put it in my. It was a bad trade, and it was just like should not have averaged up. I just cannot be doing that right now. Don't. especially without good reason. But in general, right now, I feel like I'm not at the point where I can average up or down. I'm not that good at reading the market yet. So next one, Meta. This was a day trade. So Meta, I traded it on July 5th. So as you can see, July 5th had a very strong trend up. I went long at 1053. So like here. Again, not a great entry. I mean, there's no reason for me to enter right here. I mean, I guess there was no LRSI, but if I went to an LRSI alert, it'd been like right here or like right here. It'd been around here. Plenty of room for movement. And it's pretty similar to where I entered. So again, not a great entry. I went long at 10:53 a.m. and exited at 11:12. So this candle right here. So again, this is not really the best trade. It's not a scalp per se, but it's a very short-term day trade. I mean, there was some consecutive selling, consecutive red bars here, but chopped around, but continued higher for the rest of the day. So really, I ended up making $2 on this stock. The ATR is, at least the ATR has changed a lot from this day, but $12.95. A fourth of that is like what, like $3.50, something like that. A little less than $3.50. So I made not even a fourth of an ATR. Definitely could have made more. But this wasn't the worst trade. It just wasn't that great. And lastly, my last trade that I did this week was PLTR. I went long at 12:14. So this candle, then I exited. This is a day trade. I exited at 12:38. So this candle. The reason why I exited was I saw this drift down lower to VWAP, this bounce, and I expected it to hit resistance here, and I would possibly take a profit here, but it ended up hitting some type of resistance earlier on, and then some selling back to VWAP. So I exited basically, or for a break even, made basically nothing on that trade. So break even on that trade. So in general, I can count up the trades that I performed well on. So 1, 2, 3, 4, 5 were bad trades. I performed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I would say, and 1 was a break even. So like 5 out of 9 trades were not that great of a trade this week. Definitely a lot of room to improve on. But that's the point of doing these videos, just kind of putting my mistakes out there so I'm less likely to make them again, because I'm going to have to, just holding myself accountable with this YouTube channel. So I'm going to go over the mistakes that I need to kind of improve on. I need to enter better. That's one thing I really want to work on this week. I'm not going to enter a challenge for me. Not going to enter any trades unless I have a LRSI alert or a HA reversal alert on the M5 basis at least, or M15 basis. Not going to enter until I have an alert triggered there. I also need to have a definite technical reason, not just a feeling, a technical reason to exit a trade. And the technical reason can be from the D1 or it can be on the M5. But in general, I feel like I need to be more patient with my game plan that I lay out before. And I need to be more detailed. I need to be more detailed in my game plan. Um, as I mentioned, I need to lay out all the info I have about the stock, about the SPY, what I think it's going to do, why, everything. Basically, everything I'm doing in this video for each trade, I need to do that before I take the trade. And it's just good practice in general. Even if I don't take like 75% of the trades, it's still really good practice to analyze these charts and see why I'm not taking them. So I need to do that for each of them and just figure like all the information that I have and lay it out before making a decision to either trade it or not trade it. I don't want to, I shouldn't be averaging up or down anymore or scalping for day trades. I feel like the thing having PDT restrictions is my day trading experience isn't as much as I want it to be, especially with real money. It's just, I mean, I have to learn how to scalp, so I don't day trade as often. So if I have a stock where the D1 isn't the greatest, but the M5 is doing really well for the day, it's kind of hard for me to stay into the trade longer than longer than I do because I kind of get scared out of it because I don't have anything to lean on. So maybe I shouldn't be trading stocks that have a weak D1, or I don't know. I have to think about that. Just have a more of a solid game plan on a M5 basis of what I do, my profit target, my stop loss, and everything like that. Then I need, what else do I have? I also want to start. I saw JBS's video, or he makes he puts his like trades on a PowerPoint on a slide, and he writes like why he entered, just in screenshots and like his like plan and stuff like that. So I kind of want to do that as well, and I also want to wait for confirmation through technical levels because there's a couple times where the breakout was legit, like JPM, and there was times where the breakout wasn't legit, like Meta. So I think having confirmation of a breakout is important, and a lot of that has to do with volume. I feel like, in my opinion, volume through the technical level, and the follow through needs to have heavy volume as well. Yeah, so those are the things I need to work on, and those are my trades. Not the worst week, not the best week. So I just need to figure out a way to be more like disciplined with my trade entry or my trading. Like I put the time in, but I don't take trades the smartest that I can take them. I take them very rushed and very kind of ill-informed with everything. I still have a lot to learn, and I don't want to push myself where I'm taking trades so fast because I think I know what to do, but I really don't. So I'm gonna stick to what I know, alerts, setting alerts and not entering on them, and everything like that I just covered. So that's my game plan for next week. As I mentioned, I'm doing the challenge. Doing the challenge to enter on only alerts, so only when I get alerts. And just so I can work on my entries. What other challenges can I possibly do? I also want to do this thing where stick to game plan. Stick to game plan no matter what. So if I have a game plan laid out, it has to be a realistic game plan. It can't be like crazy amount of move, but I'm gonna have a game plan laid out, very detailed, and I want to stick to it. like through the thick and thin of the trade, through all the pullbacks and all that stuff. So I'm gonna try to do that as well this week. But my main challenge is to enter only when I have an alert triggered. So, yep, that's everything. Thank you for watching, and have a nice rest of your day.